Hello, this is Corey Mitchell with TradeThatSwing.com, and this is your swing trading stock market outlook for the week of April 15th. Each week I go through the same process, just deciding how aggressively I'm going to be deploying capital and whether that's going to be on the long side or possibly even the short side. We look at a few different things, how the indices are performing, market health indicators, recent watch list and trade performance, sector performance. So let's get to it. How are the indices doing? Well, everything rolled over last week and for the week before. We've been talking about this for quite a while, how price action had gotten quite a bit choppier since kind of March. Like the S&P had made a bit of a push up here, but chop, 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 a little push up basically one day and then just kind of chop sideways. The NYSE was looking a little bit better. It's a pretty broad measure of stocks because it has lots of different industries, lots of different size companies, but we can see it's rolled over pretty hard the last week or more. Russell 2000, we've talked about how choppy it's been. It's rolled over, and NASDAQ just pretty flat. We even have the Canadian index, which is commodity heavy. It sold off last week, and so overall it's just not ideal conditions. If we're going to be really aggressive in great conditions, then we really want to be backed off in conditions like this. It's easy to get chopped up. You have a mix of, you might have some stocks going up, you have a lot of stocks moving lower, just not ideal. So I've been talking about that for a while, how being really conservative on the longs recently. And now at this point, I would not be adding any long positions. We'll talk about gold in a second. That's a little bit different scenario possibly going on there. But in terms of just kind of typical stocks, I'm not interested in buying right now until conditions improve. Bitcoin, we've been talking about this. It reached this prior high, and historically it has whipsawed around that high in up to a 20%, 30% range for more than a month before it has ultimately continued higher. So far, it is still doing that, still whipping around. This is about a 20% box, so it could even go a little bit outside that, but basically this is kind of proceeding according to the historical context, but if we did start to really break down out of here, would consider getting out and then looking to maybe get back in later if we start to see some strength. But this so far acting pretty typical, just whipsawing around. Ultimately, we want that breakout out of the top of this box. Gold, this is zoomed in. We'd been looking at the longer term picture, and we can see, so this is the gold trust, had this big breakout. This was the level to watch. We had this big breakout. Nice little consolidation here. Same with on the gold miners. So the gold miners did move up. This was what I was worried about, is if the gold miners didn't run with gold, but they did, and they also broke out with gold out of this little sideways period here. So that was, an opportunity. And now we got this huge red bar on Friday. So we've had this great run to the upside. Now after that big sell-off, if we get any more selling, I'd be looking to take profits in any of these gold stocks or the gold ETF. I don't trade gold specifically, but I do like trading the gold stocks if they're in play, or even the ETF. And yeah, so if this continues to sell off anymore, we'll look to get out, and then maybe if it develops some strength again, a little bit of a sell-off maybe, and then starts to turn higher, would maybe look to get back in. But at the moment, that big red bar on Friday, I would not be looking to add just yet. I would need to see some strength, and then also, that would further selling would dictate getting out of any current trades as well. Let's look at the market health indicators. This is the S&P. Zoomed in, we've had this nice long run. As I said, it's gotten a little bit choppier recently, but these indicators kind of show what's going on underneath the hood of the price action. This top indicator is how many stocks are above their 50-day moving average. The red is the S&P 500, and the turquoise is all U.S. stocks, and they've just been kind of flatlining, especially all U.S. stocks, right on that 50 line for quite a while. Still was in the positive above 50. That's what we want to be taking long positions. And it's recently dropped below. So this has turned to a frowny face, and that's a big sign to stay out until we get some improvement there. Volume not important to me at the moment. This is the rate of change, or how much the S&P 500 moves per day. And we're looking for big 2% drops in a single day. We haven't had any during this entire rally. It is not predictive. We could get one at any time, and when we do, that's another sign to stay out for the time being. So we haven't had any of that. It's still been a pretty orderly sell-off so far, and so that's a good sign. But if we start seeing any 2% drops or more, that's an even bigger sign to stay away. This is the NYSE Advanced Decline line, and it has just been flatlining along with the S&P 500, so basically neutral, just kind of confirming what the S&P 500 is doing. This is up volume divided by total volume. You can see on Friday a very tiny bar, which means we had very little up volume, or very little volume in stocks that moved higher on the day, meaning almost all the volume that occurred in stocks that moved down on the day. So 10% reading, meaning only 10% of the entire volume on the day occurred in stocks that moved up. That is a very bearish signal, so that is a frowny face. We don't like that. So we have multiple things telling us that we are possibly rolling over, or that we already have rolled over, and that will just stay out until conditions improve. Sectors also ugly. Pretty much everything moving down last week. I put a few up here that have held up okay: energy, communication services, basic materials, but nothing was great last week. So just be aware of that again, just based on what we saw with the health indicators, we have nothing moving great. So do we want to deploy capital when this is a hard money environment, I call it? And do we want to really be aggressively deploying capital when it's harder to make money? It's not an easy money environment. We want to be aggressive in easy money environments, and this just kind of shows us again that a lot of things aren't doing well, so don't deploy as much capital, or don't deploy any at all until conditions improve. If conditions continue to weaken, what am I doing right now? Well, if conditions continue to weaken, I may consider some short trades. We also talked about the Bitcoin and gold scenarios, so there's those things playing out as well. But in terms of typical stocks, I'm not looking to go long. I'm not scanning for long trades. I may consider some short trades if conditions continue to weaken. But overall, it's gotten a little bit uglier out there, and we've talked about how it's been a little bit harder money environment in order to make profits. Recently, indices have gotten choppy over the last few weeks. So just being conservative and just kind of watching how things play out at the moment. So that is your swing trading stock market outlook for the week of April 15th. Have a great week out there.